We are live. We are live. We are live. We are live. It's 2:00 live. It's time for us to do our 2:00 live. Welcome to 2:00 live. Got lots of stuff to talk about today. Our topic is puts. The process to selling puts is our topic for today. We're going to sell puts today. Let's see if I can get us live over here on Instagram. Maybe turn the camera around. How about we do that? Yes. There we go. There we go. There we go. Good afternoon, everybody. Hope you're here having a good day so far in the afternoon. Hope your work day or your chill out day or your summer day has been going well. You know, I have lots of teacher friends, and my teacher friends are maybe on a little bit of a teacher break so they can enjoy a little bit of off time before the school year starts up again. So if that is you, good afternoon, good day. It's almost time for school to start back up though. So I hope you're ready. I hope you're ready. Hello, S. Adams. Welcome. Okay, today's topic, we're going to talk about selling puts. I've called it a no-lose strategy before. I still contend that that's the case. Yeah, of course, every strategy has nuances, but I believe this is probably one of the most passive strategies you could use as an options trader. I really think probably the most passive as an options trader that you can do. Of course, you can buy leaps, and those would just go and go for whatever period of time you choose to let those run. I guess that could be called passive, but either way, I'm going to stick with selling puts is the most passive way to trade options as a seller. I'm Arlissa. In case you didn't know that, I'm Educator2Trader, and I coach options trading as a seller. You got to be a seller to hang out with us. So that's what I do here. Let's go ahead and get going. Got a little bit of ways to go, not a long way to go, but we got a steady stream that we need to get to. All right. If you got comments or questions, please be sure to put them in the chat. If you are on Instagram with me, you're probably going to need to come over to YouTube. If you want to see the charts or see my screen, you're going to need to come over to YouTube. I'm putting it in the chat, the link to get onto the YouTube. Or if you're a follower on Facebook, you can also find me on Facebook. You can go there and see the live video, and that way you can also see the screen. Okay, I put the link into the chat to find me on YouTube. You can also find me on Facebook. So there's some steps for selling puts. There's some steps for selling puts. Very straightforward, boom, way to get it done. There's some steps. The first thing we want to do is find a stock. You can use a screener. I'm going to walk you through the steps to using a screener here in a second. Find the stock. You want to chart that stock for some support. Then you want to select the strike that's below support on an expiration date that you like, maybe a week or 2 weeks or 3 weeks. I really probably wouldn't go out too far to be in it. Why would you want to be in the live video, Rasta? So select a strike below support on an expiration that you like, and then you want to place your trade, right? Place your trade, which means you're going to collect premiums of at least 10% of collateral, and then you want to close it on your own if you'd like, or you can let it expire. You can close it on your own, or you can let it expire. All right, find a stock, chart it for support, select you a strike you like that's below the support and an expiration date that you want. I wouldn't go too far out, 2 or 3 weeks. I mean, some people go out a little bit further, but I really feel like if I'm going to leverage my collateral as a seller, time decay is my friend. So 2 to 3 weeks is the most that I go out. Some people do go out about 5 or 6 weeks. For me, I don't like to have to watch a trade. Even though you don't have to watch it, I don't want it to be in my screen that long. So I don't do those, but you could. You can get more premiums. The further out you go, the more premiums you collect. But as you see here, I say collect premiums of at least 10% of your collateral. If you can get to 10% of your collateral money in 2 to 3 weeks, I say go for it. And then you can close them on your own, or you can just let them expire. All right, let's go look at what a screener would do if we were working on a screener. I use bar chart as a screener. You go to, barchart.com. You can see that, barchart.com. And when you select options, this is a free screener. You can pay for it. You can pay for it and be able to have a lot more control over the filters, but I don't. I just go with the free version. Under options, you can pick naked puts. This is what I select when I'm looking for puts trades. And then this changes throughout the day. It changes each day, kind of depending on when you look at it. The information is, it changes some. Whatever kind of scan they run, it pops up with different information at different times of day. So I've already pre-selected one for us to do. We're going to do Nicola. You got Nicola. Now, the bar chart gives you all the information that you're looking for. It gives you a symbol, the price of the stock, the current price of the stock. It tells you, actually, they suggest which strike you can use. If you use the 250 strike, they tell you what expiration date to use, how much money you should expect to make, the volume and the open interest of this particular strike and date and all that good stuff. And then you got Delta and IV and all the other things that go along with that, right? You can do the 2.5 strike of Nicola, or you can do the 3 strike on the same expiration date. You'll take in a little bit more money because you're closer to current price. Current price is $3.26. So if you get the $3 strike, you can look at all the information across here. It's got a little less volume and open interest. Got a lot of open interest at that place, not as much volume as the 2.5 strike. So we're going to look at Nicola. Let's go to Nicola. Now, they told us 2.5 or 3 as the strike. I'm on the daily chart of Nicola, which means that every day, every candle is worth a day's worth of data. Why would Nicola be decent at this point for a good trade? Well, the implied volatility is up. And when the implied volatility is up, we definitely get better premiums there, as well as Nicola just had some good news to be mentioned. Something to do with their trucks, that some company ordered some of their trucks. And so they've got some good news. So good news always causes things to rise, causes things to rise up a little bit. Let me move this so y'all can see what this says under here. Current price of Nicola is only $3.25. So you really could, use this for selling puts, or you could buy it in 100 shares and sell covered calls against it. Either one would work. The premiums are nice because the IV is up. But let's look. So there's a gap here between this was yesterday and today. It gapped up here. Of course, nature abhors a gap. So you want to keep that in mind when you're trading, but there's buyers in here. So the price may come in and pull up. But this gap, the bottom of the gap is 268, which may be why you saw that bar chart suggested the $2.50 for the support, because there's a big gap between current price and the 250. You could do the $3 gap. $3 strike price would be in the middle. That's right in the middle of this gap. If you're going to go out 2 or 3 weeks, the thought is that it would stay above that $3. When you're selling a put, you're saying you believe price is going to stay above the strike you picked. So if you pick 250, you believe it's going to stay above 250. If you pick $3, you believe that the price is going to stay above $3, or at least be above $3 at expiration. So now let's flip over to the, we flipped over actually to the, there we go. Let's flip over to the trade tab inside of Thinkorswim. I got to make a move here so I can see stuff. I can't see anything when I have it there. Hey, Adrian, how you doing? All right. So there we go. Now I can see the screen. I can see the same thing that you all can see. Looking for August the 18th, which is what bar chart suggested. Now, you don't have to go with what bar chart suggested. You can look at just this week. We're looking at Nicola. So let's say we look at this week at the 2.5 or the 3 strike. 2.5 strike is going to pay $8. You're under the bid column when you're a seller. And the 3 strike is paying $25. That's almost 10% in just this 1 week. I think our trades yesterday, we did EOSE yesterday, and we went just the same week, and we looked at something that was 10%. I suggest you get somewhere between 8 to 10% return on your collateral. If you're going to leverage your capital, you want to get a decent return. A 10% return on your money in a week, that's a hearty hello, right? You can look out for, let's go to August the 11th, the week of August 11th. Well, 2.5 strike there is paying $35, and the 3 strike is paying $60. That's a 20% return on your investment at the 3 strike. Remember, current price is $324, so it's not very far away from there. It's got a 43% probability out of the money, which is a little closer than some people like to be. The 2.5 is a 55% probability. 70, so probably 2 strike might even be a better move, because I do try to stay around 70 to 75% probability out of the money. So a 2 strike may even be better, and it's going to take less collateral. The collateral you need to put on here is the strike you pick times 100 shares. So you're going to leverage $200, and you're going to make $16 in the next 2 weeks. Let's go back up here and see what our 2 strike looks like up here. Well, the 2.5 strike in a week is a 78%. Say that was only going to pay $8. That's not what we're after. So August 4th, in my opinion, August 4th wouldn't be the best place to, you could do the 3 strike if you're comfortable with getting a little closer. Get a little closer. The 11th of August provides some opportunities, either the 2 or the 2.5 strike. I'm liking the 2.5 strike. If you want to go out to the 18th, which is what bar chart suggested, you also have the 2 strike here is paying $21. It's a 65% out of the money, which as a seller, you want to be out of the money. Out of the money is a thing that we want when we're a seller, right? You want to be out of the money. So I like the 2.5 strike. Those are 2 good places. We did see that 2.5 is below the gap, so I would be comfortable getting a little bit closer. This is going to leverage $250 of your capital. All right. So if you were to enter this trade, let's say I'm picking the 2.5 strike on the 11th. Actually, I don't want that one. I want to do the 11th is where I want to go. And I want to do the 2.5 strike on the 11th, which means next Friday is the expiration of this trade, right? So we're selling 1 contract of Nicola for next Friday, the 11th. 2.5 strike, a put. We're selling a put, 2.5 strike. What this says is I'm going to allow the broker to block up $250 of my buying power. The broker's going to give me $35 in return. So really they're only blocking up $215. 250 minus 35 is 215, right? 215. That's how much buying power the broker is going to reserve while this trade is going. The broker is going to reserve it. You're not spending it to enter the trade. The broker's just putting it in like a deposit. It's like when you get a hotel or you rent a car and they block off a part of your credit card or your debit card. Same thing's happening here. The broker's doing this because if at the end of this process, you get assigned the shares, the money needs to be sitting there that will complete the options contract purchase. Because when you're selling a put, you're saying that I'm willing to acquire 100 shares at this price. And at 2.5, I'm saying I'm willing, this is what the contract says, a 2.5, when you're selling a 2.5 put, you're saying I'm willing to acquire 100 shares at $2.50 each. Hey, Saida, that's why the broker reserves that money. So if you need to perform the contract that you got into, then the money to do that is sitting over there and waiting for the process to finish. All right. So confirm and send, you pick that. It tells you here your max profit is $35. That's all you're going to get from selling this put. You're not getting any more than that. Your max loss is $215 because this is what the broker is blocking off or that you're going to pay. It's called max loss. In the case of selling puts, I don't consider it a max loss because if you were to perform the purchase of 100 shares at $250, that's why the $250 is sticking in my mind. If you were to perform the contract and buy the 100 shares, you're going to have 100 shares. So you're not losing $215. You're spending the $215 to buy the shares that you said you were going to buy anyway. Okay. So you do want, I'm going to make this point. You do want, if you're going to sell puts on something, you do want to sell puts on a stock that you wouldn't mind owning, that you would be okay owning. If you got some stock, then you have no desire at all to own that stock, then don't sell puts on it. Don't sell puts on it. And what makes you have a desire to hold the stock? Maybe the stock like Nikola does batteries and they use hydrogen for their charging. That's to me is a future moving technology. I like that idea. I would do EOSC. EOSC has stuff to do with energy using non-standard materials. I'm all for that. Right? These are things that I could stand behind that. I sell puts on AMC. Why do I sell puts on AMC? Well, AMC has managed to keep a floor of about $4. It goes up and down, but it's managed to stay above $4. So it's a good stock with good premiums to sell covered calls against. And who doesn't like the movies, right? I hate that their stock is worth $4, but it provides a very good rinse and repeat opportunity for me. So, I'm just going to enjoy the movies and enjoy the weekly selling puts on AMC. These are the things, but there could be some other stocks. Maybe you are dead set against CBD, then please don't go get a CBD stock that you're going to trade. If you got some, proclivities about how a certain company does this or that, then don't trade that stock. All righty. Let your conventions guide you. So we're here. We're going to have a max profit of $35, max loss $215, but really not max loss because you're going to acquire the shares at $2.50 each. They tell you what the credit is, how much is it going to cost you in fees. And then when you're ready, you can just push send. Okay. There we go. We sold a put on Nikola for $35. If you want multiples of these, let's say you got a stock that you like. I was just mentioning AMC. For a few weeks, several weeks, I did AMC just one contract. When I saw that AMC was good for repeat, for rinse and repeat, I started selling more contracts on it. If you get $35 on this one at leveraging $215, then do two of them. You take in $70 and you leverage $430. You know what I mean? You just do multiples. You don't have to do, 5 different stocks. You can do more of one. I do like spreading it around sometimes, just so if one stock has a problem, then it doesn't take everything with it. But that really is up to you. It's an individual preference. Okay. So we said you were going to look on bar chart and find you some opportunities on bar chart based on what your resources will stand. You see, they got strikes, all these prices. It goes up and up and up. You can even do Mara for $15. Mara has really good premium. Mara and Riot are kind of in the same space, right? The Coinbase, the crypto space. Sage, I'm not really sure what Sage is. Sage is, a therapeutic company for $36. Sage Therapeutics. And then you got AI. We know what AI is all about. They've come along here most recently and been all involved. They're really good premiums here but it's about a little more than 10%. It's not like it's tremendous. It's a little more than 10%, but you're putting out $4,000 worth of collateral. You're allowing the broker to block up $4,000 of collateral when you do a 40 strike and you're collecting $465. So, maybe you can start small. When you get more comfortable and you really like what you're seeing, maybe you jump to something that's a little more expensive. Like I traded selling puts on Mara for a while. Then Mara started running up. And I was like, well, let me go back down here because for one Mara contract for $1,500, I can do, 2 or 3 AMCs. I can do more AMCs, or I can spread it around a little bit more than putting $1,500 in one place. But that's, again, a personal preference. Okay, so you use the screener. First thing we do is we use our screener. You want to chart for support. We did that. Or you can just use whatever the screener suggests. Bar chart suggests 2.5 or 3 strike. Those are the two I looked at. Select the strike below that support. Get the expiration date you want. Place your trade. Collect the premiums of at least 10% of the collateral. And then you can close this trade when you're ready, or you can let it expire. You can close it or let it expire when you're ready. I'm going to see if I have any puts in here so I can quickly show how to close these trades. I don't know if here's a put from yesterday. This is the one we did yesterday. I don't think it's Nicola's the one we did today. Space is not that. And we can use this Tupperware one. Speaking of which, Tupperware has been a really good one to sell puts on. But if we're looking at this Tupperware trade, I'm going to show you what it looks like as we go forward with what the money looks like. Trade price is what I took in premiums, which was $20, right? It's going to expire this coming Friday. I took in $20 in premiums, right? Currently, the mark means this is what it's worth. It's now worth $2.50. I took in 20. It's now only worth $2. This is a good thing. When you're a seller, you want premiums to go down. When you're a buyer, you want stuff to go up. When you're a seller, you want premiums to go down. You can see here, it shows that I'm up 87%. I'm up 87% here. I don't know if this gets bigger. I'm up 87% down here, which is $17.50. So I'm free to close this. I, of course, could leave it till expiration, or I could go ahead and close it. The benefit of closing it now is the broker has $200 or $180 of my money reserved in the buying power. The broker has $180 of mine on hold in buying power. So if I release, when I close this trade, my buying power is also going to be released. I'm going to get to keep the $17.50 because the broker gave me this money right off at the beginning of the trade. They give you the money right away. I'm going to buy back because I sold to open. I'm going to buy to close. I'm going to pay $2.50 to get out, or $2 or $3. You really can't pay the 50 cents. And then if the broker is going to release my buying power. So I right-clicked on the line I want. I'm going to create a closing order, buy back the one I'm buying back, because when I opened it, I sold to open. Sell to open is what I did when I entered. And now I'm closing. I need to buy to close. Tupperware looks like you have to pay $5 to get out, which means I'm going to keep 15 of the dollars that I received. It says here it's green now, which means I'm buying. I'm going to buy one put contract back at the 2 strike. I'm going to pay $5 for it. This number won't change. It's only $5. It's jumping by fives. Whoop, whoop. I'm going to pay $5 to exit, to buy to close. And when I'm ready, I can close it by sending. The broker's going to release my buying power back to me. I will have bought my way. The trade will be closed and complete. That money now, that $180, plus the other 15, really, so $195 is going to be mine to keep. It'll be mine to keep. Actually, I don't know. I'm thinking it may be $215. Yeah, that's $215, not $195. 200 was the strike. I made 15 more dollars. That's $215 I've got. So I got $15 in profits from my $200 of collateral. There we go with that. Okay. I don't see it. It hasn't finished working yet. That's still working. Well, we'll move out of the way so I can see. Up here in the working area, the Tupperware trade, it's worth $250, and I'm saying I'm willing to pay $5. See how it's not letting me just buy it for more than it's actually worth. But my other option, I can leave this here to continue to do its thing, put a GTC on it, good till canceled, right? It'll stay as an order until it fills. And if it doesn't, if we go on into the expiration, which will be Friday, then it'll just close worthless. Close worthless means I don't have to pay anything to buy it back. I'm willing to buy it back now for $5, but if it's going to close worthless, that means I have to wait for my buying power to be released, right? I have to wait for that to happen. And then they'll release my buying power, and I'll keep the whole $20. I'll keep the whole $20. So we went through the steps. Find a stock, You can use a screener bar chart. There's other screeners besides that one. I like that screener, but I've heard of others. FinViz and TipRanks, I believe, has a screener. Yahoo Finance, Thinkorswim has a screener. If you use Thinkorswim, I believe Robinhood has a screener as well. There's so many screeners out there, right? A lot of people have screeners. I like bar chart. It's not the only one though. Chart support. Look for the strike below the support. Place your trade. Get your money right away because the money comes right away. Then you can close it on your own, or you can let it expire. You can close it on your own, or you can let it expire. All right. Those were the steps that are for selling puts. And selling puts is great for growing a small account because you just rinse and repeat that every week or every 2 weeks. You find 2 or 3 or 4 stocks that you really like, and you just rinse and repeat those week after week. Very passive because you don't need to watch them. You pick a strike that's below support. Let the trade go on through whatever period of time expiration. If it expires and it's above your strike, you keep the money. You keep the money, you get your buying power released. If it expires and it's below your strike, the broker is going to put, that's why you're selling a put, the broker is going to put the 100 shares in your account, and you're just going to go forward and sell covered calls, right? You're going to go forward and sell covered calls. So I've gone through the steps pretty good here. But if you really want more, because there is, a little bit more to it. If you really want more, you should go to the, to the full training, which I believe it's at bit.ly/E2T/wheel strategy, because this strategy is included in the whole wheel. It includes the whole wheel strategy. It's not just the puts part of it, but it's also selling the covered calls when you receive the shares. When you receive the shares, you're going to do covered calls on them. You're going to use your asset then to continue to generate resources, because you don't necessarily, you want to get, you end up with the 100 shares. You're like, well, I want the 100 shares and all, but what am I going to do with them when I get them? What am I going to do with the shares? Well, you're still going to use them as an asset as well, right? They're still an asset. So the wheel strategy includes selling the puts as the first step. You collect your premiums. When you get assigned, you get the 100 shares. Then you sell covered calls, collect premiums on those until they get called away. Stocks get called away. You collect your profits because you're going to set your strikes higher than what you paid for them. You want to set your covered call strike above in price what you paid for them. We're not going to release them for less money than what we paid for them. And then when you collect those profits, you go back and start again. It's a whole wheel. It's a whole wheel strategy. It just goes and goes round and around we go. That's why when you start selling puts, though, you also want to look to see what kind of covered calls money can you make off of them. If the selling the puts has really great money, but the covered calls not so much, you might want to, rethink which strategy that you use, because if you end up with the shares, you do want to be able to sell covered calls for good premiums too. All right. All righty. You can check the link there for the E2T wheel strategy to get the strategy there. Right. You see, we got our new shirts on, our Stay Green and Get This Money shirts. You can go into bit.ly / gotta have a slash. Not that one, this one. There we go. Stay Green and Get This Money shirts are at bit.ly/mail INSP, which is Melanin Inspirations. You can grab your version of the shirt. We got black and blue and off-white. If you have some other color you think you like, let me know and we'll make it available. We'll make another color available. Yes. If you're watching here with us, please go ahead and subscribe to the channel. Subscribe to the YouTube channel. Hang out with us more often to where you'll see exactly when I post stuff. You'll be able to come on and see that, right? You'll get all the notifications. Helps the channel to grow, help us to pass the word. If you know people who are trying to learn how to trade and whatever, then, pass the word. I was talking before about the options 411 for newbies 6-week training. I pushed it back to August the 17th. The options for newbies Did I put that on here? The options for newbies 6-week training moved back to August the 17th. That is for people who are new to options and really want to learn how to trade options and start to make some of this passive money every single day. If you following me on Facebook, if you don't, then go ahead and follow us over there too. Join our Facebook group. But that's where I put every day. I put our profits from our community, and every day we got a good 10, 15, 12, 11, 8% return on collateral, and that's daily returns. That's daily returns, 10 or 11% means you're making $50 a day. You're making $75 a day. And in these streets, it takes about $50 to fill up my van, right? So if I can make $50 a day, that means that's one tank of gas, and I'm not driving $50 a day worth. I'm driving probably about $50 a week. But one day of trading can cover that bill, right? So we do want to pull out some daily monies. And that SPX XSP strategy that you see running across the bottom of the screen is how we're making that money using credit spreads in the community. So you're free to grab hold to that, right? Join the Facebook group, joining or subscribing to the YouTube channel. We have a membership where we all trade together. So if you get nervous about, I don't want to do it, I do it by myself, we got a whole crew of people who are there to help. Who are there to help me, there to help you, there to help each other. We all trade together, and we do a morning pre-market call. We do an afternoon call. We do it's not a call in the afternoon. Take that back. In the afternoon, we do a virtual power hour. We hang out together in the Telegram during power hour and trade together that way. We used to have an afternoon call. We dropped back to just the morning call for pre-market. That was more important. And then on the weekends, we have coaching, where we're training to make sure that we're prepared for our time during the week. And it's just really great to have a community to trade with, because trading can be lonely. You're pushing the buttons. You're not sure if the trade's going to go right. You're not sure if I'm doing the right thing. Is this the right time? You need somebody to ask sometimes. And you can do it. Everybody pushes their own buttons, obviously, but it's always good to have somebody to bounce trade ideas off of or to clarify things for you if you get stuck. All righty. Well, it's been wonderful hanging out with y'all this afternoon. I kept it to about 30 minutes. Look at me. Proud of myself. Woo, woo. Proud of myself. Proud of you, Arlissa. Proud of you. You have to encourage yourself in these streets. That's what you have to do. All righty. We do two things in this community. We do two things. We stay green and we get this money. All righty. I'll see you all tomorrow. All right. Goodbye, everyone.